Welcome. We're delighted to be here with two Wall Streeters, Sallie Krawcheck, founder of Ellevest, and Maura Cunningham, founder of Rock the Street Wall Street, for a compelling conversation during April Financial Literacy Month. We just saw Ellevest ring the New York Stock Exchange bell, celebrating a major milestone of $2 billion in investments. Congratulations, Sallie, to you and your team.
Thank you. It was very exciting, I have to say.
And Maura, Rock the Street Wall Street is bringing the M and STEM to high school girls through financial and investment fundamentals. In addition to more than 25 cities across the US, we are expanding our footprint in Toronto and London, expanding the pipeline of women in investing. And with that, Maura, I leave it to you and Sallie to jump off the conversation.
So Sallie, $2 billion, that's quite a threshold. So tell us more about that, and congratulations again.
Thank you. No, it was very exciting. I'm really thrilled for the team. It took a while to get here. They say the first billion is the hardest, but the second billion is hardest too. And that represents tens of thousands of women investing in their future, building wealth, becoming more confident, which comes with building wealth. Really having taken those actions to increase their power as well. So we went to ring the bell at the New York Stock Exchange. I thought I've been here 1,000 times. This is just a typical morning. And I have to tell you that when I pulled up, walked up to the building and there were all the Ellevest signs all over it, I got sort of emotional, truth be told. It really felt like an important moment, an important mark for us.
I can imagine. I can truly imagine. It is quite a milestone, and good for you for getting women to understand that it's better to invest your money rather than staying in cash, which women have, unfortunately, the habit to do, which we, given that we are at the younger end of the pipeline in terms of financial literacy and so forth, we are teaching the girls how to assess risk. And so clearly your organization is doing that as well. So kudos to you in getting them to understand the benefits of taking a calculated risk, shall we say.
In fact, a known risk is keeping your money in the bank. And of course you should have some money in the bank, some money that's there safely for you, but that that money does not keep up with inflation. So it becomes less valuable over time. Whereas we think of investing in the stock market, we think of it as so risky. But the truth is, historically, if you've had a long-term time horizon, it's been less risky than you think, that the ups and downs have been overtaken over time by, the growth of our very strong economy, which, translates then into the prices of stocks. So I've always conceived of investing in the stock market as riskier than it's been in a diversified investment portfolio. But over time, it historically has not been.
Totally agree with that. And we all know the long-term trend is up. So there you have it. We just have to get them started earlier too.
Oh, for sure. For sure.
So about that. So as you know, at Rock the Street Wall Street, we're reaching girls at an earlier age. We lose girls in math at age 9 in the United States, and in Western Europe, we don't have this problem. In China, Russia, India, nor interestingly enough, Eastern European countries. So it's clearly a cultural issue, not a capability issue. So we decided to tap into them while they're in high school and get those girls back into math. So you and I both know, Sallie, that it's nothing financial math, quite frankly, and it's nothing much more than arithmetic, 6th grade arithmetic for the most part, maybe first year algebra, with the exception of our algos and quants. But surely 98% of us that are in the field only had to know, for the most part, first year algebra of that. So we have among our students many young women who are also interested not only in investment literacy, but also they're interested in potentially coming into the field. So I've been an advocate for, if you're going to diversify the members of our industry, you must catch them earlier, simply because as a one half of the species, you're losing us in math. as I said, at age 9. And so if the industry keeps looking for them at college level, they've already opted out of finance and economics. And so we are proud to say that our students are studying finance and economics at a rate of 5 times the average female student in the United States. But can you say more, if you would, about women in the industry and how helpful it would be to get more of them into the industry?
Well, first of all, I will tell you, I've been in Wall Street since I graduated from college. And I have determined that nobody uses trig. You said maybe there's some algebra. There's some algebra. There's some statistics if that's the part of your job. But trigonometry, which is my bear, I promise you I haven't used it. Calculus has not been used. I promise. Those things you can leave behind. But what I would say is I didn't consider myself a math gal. I am a puzzle solver. And so what I loved about my time on Wall Street, and I really started as an equity research analyst, which sounds geeky. It's not. It's actually fascinating because it pulls together all different parts of the brain. In order to be a great equity research analyst, you have to have the analytics, you have to have the math, you need to be able to build a spreadsheet. More importantly, you need to be able to glean insights out of the spreadsheet. If the top line grows by X, what happens to the gross margin? What happens to the bottom line? Do these make sense? Is your balance sheet balancing? I love doing puzzles, and building these earnings models are puzzles. I love writing as well. And part of being a research analyst is writing and convincing people of your argument. I love dealing with smart people and having a debate and a back and forth. And being a research analyst does that as well. And so for me, it was probably the most well-rounded job around. It wasn't, I was locked in a room doing one thing or the other, but my day had this rhythm to it where I was being analytical, I was being creative, I was engaging with people. So I loved it. I really did it. It's not, your old, fashion calculator in a room. So it's, I would say, first of all, a great career for somebody to be engaged in. And then it's great for the industry because having, right now the industry is not diversified enough. And diversity is power. And so having different perspectives and different backgrounds and different insights and different levels of education coming at these problems that the industry is trying to solve. Should I buy this stock? Should I buy, should this be my asset allocation? The diversity is helpful for the industry. So it's a win-win when more women are going into the industry, building fantastic careers and then building a stronger industry, in my opinion.
Well, obviously, I couldn't agree more. That's what we're all about. So, and one of the things that we tell our students, of which we have probably over 1,000 each year now across the United States alone. So we explain to them that if we change who we invest in, we can change what we invest in. And I think that's a big part of our mission, is to get more women seated at the table. As you probably know from sitting on other boards, the people who really are some of the decision makers include those who know the finances, those that are on the finance committee, and among other things, can also understand, the cost benefit analysis of things. And so it's critical that women have that seat at the board. And that's ultimately where we want to get these girls to come and understand that that's where the power lies, quite frankly.
That's where the power lies. That is where the power lies. But that you said it, and I underscore it. That is where the power lies, is with the numbers.
Exactly. I was listening to a podcast this morning. I won't mention the name, but there's some things going on today about a particular company, and it's the board and a decision that needs to be made or not made. In any event, it's a big power play. But one of the things that we're also noticing lately is there's a bit of a pushback on the DEI initiatives that were rolled out. Can you say more about what you're seeing? Because we're seeing, on one hand, we're seeing some pushback on it, but on the other hand, we're seeing some more male allies come to the table with us.
Yeah. I think the pushback is ridiculous. And I come at it from a research analyst perspective. I'll tell you, back when I was a research analyst, and choosing whether to invest in this stock or in, this sector. Whenever I would meet with clients, I would always get the question, is the leadership team of this company any good? It's a basic question. And I'm a very analytical person, so I tried to, and I knew I had an opinion, but I didn't think my opinion, particularly when I was in my 20s and 30s, I thought, I don't know that my opinion's worth more than anybody else's. I don't, it's an opinion. Is there any way I can analyze and quantify this? What makes a great leadership team? Is it that they all went to Harvard? Is it that they all have worked together for X number of years? Is it that they're all in their 50s? Is it, they're all from this part of the country? Is it that they're all analytical? What is it? And there's one thing that correlates with quality of a leadership team, and it is diversity. And it's diversity of all kinds. It's diversity of thought, perspective, background, education, gender, ethnicity, sexual orientation, optimist, pessimist, you name it. But think about it. If you don't have diversity, then you have the opinion of one person. If you do have diversity, you're bringing all those different things together so that you can have the debate and make a better decision. So this pushback on DE&I get it, but I don't get it. But it's just not smart. It is not smart, because diversity has been shown to lead to superior performance, higher returns on equity, greater innovation, lower risk, greater employee engagement, greater consumer engagement. The power of diversity is so great that diverse teams actually outperform smarter teams. Smarter teams. It's by bringing those differences together. So look, I know people feel threatened by change, but change towards diversity is a very good thing.
So it's interesting, we're in 3 countries now, Sallie. We're in the US, the UK, and Canada, and it's fascinating because we're not having that pushback in the UK nor in Canada. So it's clearly political.
Yes.
And so,
Sure.
Okay, so like you, I grew up on Wall Street. I absolutely loved it. I really did. I had a great time. Like you said, you're around smart people. You're around people who think really quickly. There's always things happening. I was in the trading pits. I mean, it was a lot of fun, a lot of action going on, and you had to just constantly be on your toes. You have, obviously navigated across a lot of known firms, and you've been able to make it to the top. So can you share like a key lesson that you learned in getting there?
Yeah. Of course, it takes hard work. It takes a lot of luck. It takes mentors who and sponsors who really care about you and who fight for you. I actually found, for me, and this may sound counterintuitive, it took me sticking out. And you might think, well, gosh, you're in the minority and there are very few other women. Why don't you just put your head down and get your work done and sort of glide on through? But I realized, and this is, decades ago, but I realized that at the age of 26, I was the senior woman in the Salomon Brothers office in London. And so I thought, if I try to do this the way others have done it, by definition, that I'll fail. Why don't I take this characteristic I have, which is I stand out, and then just really stand out. And what do I mean by that? As a research analyst, oftentimes research analysts will, do the housekeeping. A company write up a report. This company reported earnings. They came ahead 2 cents from where the expectations were. A penny of it was currency, and a penny was the tighter expenses, and therefore I'm taking up my estimate by 2. Like, I'm bored already. So imagine if that's the recipient of one of those pieces of research. A boss of mine once said the calls that were worth making were big calls on big stocks. Find something to say, not my opinion, backed up by analytics, on a stock that people care about. So my very first piece of research was on a company that no longer exists, American General. The company it was an insurance company, but growing like a weed through lending and really putting loans on the books. And everybody said, look at this, is amazing. They found a new business opportunity, a way to grow. I looked at this and did a deep analysis and said, this is bad growth. This is putrid growth. This is growth of loans, but credit is deteriorating also. And you can't see it because the loan growth is so significant. But if you adjust this ratio and you lag this and you lag that, you can see there's deterioration. I wrote this up and I titled it American General, Whoa Nelly. It was the first piece of research I wrote. And 2 months later, I was right. And I could go on. And I believe me, I had times I was wrong. But my goal was I'm covering this industry. If you are going to invest in a stock in this industry, if you do not talk to me, your boss will be upset with you. That you will go in and say, I want to buy XYZ stock. Sallie Krawcheck covers that stock. What does Sallie have to say? Oh, I don't know. I didn't talk to her. What do you mean you didn't talk to Sallie Krawcheck? She's the one doing the interesting, controversial, unconventional research. And so by doing this, make no mistake, I increased my risk. If my first call was right, my second call was right. If my first 4 calls were wrong, I'm sure I would have been out of business. That would have been it. But I thought, let me just go for it. And let me make big calls on big stocks and stand out and be the person you have to talk to. By the way, my next move, when we've hit on this a little bit, was I went with the numbers. Since I was in the financial services industry, the power was not in HR, which is a terrific, terrific department and useful and helpful and so key. That's not where the power is on Wall Street. The power is the chief financial officer, the chief numbers officer. And so I set my sights and became the chief financial officer of Citigroup, and so by doing that, by being controversial, not being scared to be wrong, but being right more often than I was wrong, and then going for the numbers is how I made it to the top.
I'll share something with you too. It's funny. 2 things. One was similar to you. I sensed something that was getting priced and had an incredible swing. This is before the ETFs. We had UITs. I don't know if you remember those, Sallie. And we had a conglomerate of firms that were issuing them. And long story short, we had the Z tranches of CMOs being priced by a firm, an outside firm, and the price swings were phenomenal. And granted, they're a Z tranche. But I'm like, something's wrong here. So my boss, I told him, said, look, it's the numbers, right? I said, there's something really, really wrong here. Watching what they're pegging it off of, there's something wrong. Somebody doesn't know something here. Let's go figure this out. Because, clearly our unit holders were getting upset about it too. And so long story short, I did my analysis and I had I actually went to the trading desks. I sat next to each of these traders who were trading them because back then they were in their infancy. And so there were only a few people who understood CMOs at the time, collateralized mortgage obligations, back then. And so I actually was one of the few who understood them. And it was fascinating to hear what they said versus what they said previously, like 30 days before. And so I would call them on it, and those kinds of things. And so long story short, we got that fixed, shall we say. But it was a fascinating thing about diving into the puzzles, diving into the numbers. I mean, and again, I want to make sure that everybody understands, like you said, it's not trig, it's not calculus. These are arithmetic kind of numbers. And it's just fascinating to watch a sequence of what's happening and to get to the bottom of the story. The other
Puzzle
time,
solving. It's absolutely puzzle solving. That's what it is.
Yeah, and it's fun,
Yeah.
It's fun. And the other thing was, I had gotten a bonus, and then I said, it's quite frankly, I said, don't think that's quite enough, and they were quite surprised at me. And then I had all my numbers under my arm, and I said, well, let me show you the numbers. And then they doubled my bonus. So again, I can't stress the strength of numbers. So I agree with you totally about knowing the numbers. It's Financial Literacy Month, and we're delighted, obviously, that you joined us today. And I'm proud that our students in Rock the Street is growing its footprint. And as you know, these are girls who are aging up. We have over nearly 1,000 that are entering into the workforce each year now, via internships and job shadowing and entry-level positions into the profession, where we offer our Alumni and Career Center, by the way, because our girls have aged up. We're at this 11 years now. We got a decade behind us. So clearly our students are in college and post-college. And so we created this Alumni and Career Center, which has just taken off. We have a lot of live listings there as we speak. But I wanted to talk to you, anything that you might like to add to encourage our students, our team, and our volunteers in terms of what it is that we're trying to achieve at the beginning of the pipeline of knowledge about investing.
Yeah. Start early. I'm so glad y'all are starting early. Just start early. The worst investing advice I ever heard was my ex-husband telling he's still my brother, but my ex-husband telling my brother, don't worry about investing in your 20s. You're going to be making so much more money in your 30s and 40s. You can wait till then, which demonstrates a complete lack of the power of compounding interest. And compounding interest is not a particularly intuitive concept, but it is a very powerful concept. And in fact, the greatest investor of all time, Warren Buffett, says it's compound interest. That's the ticket. And so starting early has such advantages, the mathematical advantages, of course, but even the advantages of confidence. I always say the best career advice nobody ever gives but me is to invest. And if you are taking some part of your paycheck, investing it with someone like an Ellevest, and allowing, part of every paycheck to get in there, and you'll have your ups and your downs, but over time, historically, has gone up and compounded. Boy, if that doesn't give you more confidence at work, I don't know what will. Because, I love your story, Maura, about I told them this isn't enough and they doubled. I would never have been able to do that. The only way I could do that is if I knew I have enough money, that if they're like, well, I hate you and you're fired, you're fine. No, that never happens, by the way, but I was brought up in the South, so I would worry about that. But, you can just act with so many more degrees of freedom. In fact, we had a recent survey we did at Ellevest about what happens when women get more money, inheritance, a windfall of some kind, and found that young women are 3 times more likely to say they want to leave their partner when they have more money, which is a good thing. It's sad when marriages and partnerships don't work out. It's even sadder when you're stuck, when women are stuck in it because they don't have the money. And so, starting early, gaining the confidence, and then having more degrees of freedom in one's life, I think is pretty important.
Couldn't agree more. Totally couldn't agree more with that. So, well, I appreciate the time you spent with us, Sallie. You are a font of wisdom, and I love the fact that you speak as candidly as you do. I think we need much more of that. I hope we do see more of the young women speaking more of their minds, and I do agree with you with being economically, financially independent gives you power and gives you choices. I couldn't say it better myself. So thank you for bringing it back home to that. And with that,
thank you for having me.
Thank you. Thank you. I think we're good.
Wow, what a motivating conversation with 2 Wall Street founders. We appreciate you joining us today. Please continue to engage with us on our website, LinkedIn, and the Alumni Career Center. Thank you for helping us bring the M in STEM to high school girls.